what I want to do today is talk a little bit more about mindset, the emotional side of trading. So to put a light on that, because trading is not only knowing how to read charts or how to put on trades, it's also getting to grips with your own emotions. For anyone who has watched or listened to the YouTube video I made about mindset and risk management, that goes into this subject too. But well, today I just want to talk about it a little bit more, about the panic you can have when in a trade or closing too early, because it's sometimes difficult to let trades play out or to see red numbers, to see negative P&L. So yeah, mindset for me, I think if you ask me how important it is, I would say that maybe 90% of trading is about mindset. 90% of trading is about having control of your emotions, having control of let's say being able to look at a chart objectively. What you usually see is when people start trading, is that's also what I see with new members coming in. We expect quick riches, quick gains. We have the feeling that we should be in a trade always. And sometimes even if we win our first couple of trades, we feel invincible. So what it's about is that feeling when you start trading and you haven't traded before. So even when coming into the Discord and following signals, people see P&L shots in the P&L section, or look at other people making a lot of money, and we have some expectations that are basically off, because sometimes we expect that we can make $50 out of $100. But if you get back to percentages, that would mean that you would up your balance by 50%. What I basically want to say is that, and I say that a lot, is that you do and you should have, you can't expect yourself to be a pro trader or a good trader or profitable trader from day one. We talk a lot about risk management. We talk a lot about being patient and just wait for trades to come and signals to come. But also we talk a lot about make sure you learn first before you jump on any trades. And we don't do that on purpose. We don't do that because we don't want you guys to make money. We do that because we know that if you don't put in the time to learn and understand how it works, you will lose money. And I think there's a lot of people in the Discord that can vouch for that. But what you need to do is that you, even if you just follow signals, you have to have a basic understanding of the chart. You have to know what you are doing. If it was as easy as just follow the signals, putting a lot of money on it, or if it was as easy as just starting with 100 and making that $500 overnight, we all would be filthy rich already. But that's about expectations. Expectations are that you will in the end be profitable, but you have to take your time, and you have to take lessons, and you have to learn about what to do and how to trade. So one thing in that is the risk management that we always talk about. So even if you have $100 account, your risk is 1%, or on like battleground trades, and like max maybe 3% on our trades. But you always have to have risk in check. And in the beginning, that will feel like, well, I have $100 account and I'm just making dollars or even less on every trade. But one advice I can give you is just don't look at the numbers, but look in this case at the percentages growth of your account. Because let's say if you grow $100 account to $105, it feels like it's not that much money, but $5 is in the end on $100 balance is 5%. So you picture yourself, you would be trading with 10k account or even a 50k account. That 5% would be a week's wage or a month wage for some. So it's all about those expectations and know what you start into. So usually if I see people come in the Discord, expectations are those what I said here. We expect quick gains or overnight riches, and that's why one of the first things we say to everybody who gets in here: trading is a marathon, it's not a sprint. You have to put in the works, you have to slowly build it up, because it's still a fact that maybe 90 or 95% of everybody who starts trading doesn't make it, or gives up, or isn't profitable in the end. And even though even that 5% or that 10% that makes it won't be profitable in the first year or the first 2-3 years maybe. There's a lot of pro traders who were well, break even at best in their first 10 years. So yeah, we expect, and now I'm really talking about trading, not by spot holding and investing, but we expect in trading that it's easy, and it becomes easier when you get to a point where you can be emotionless when you're trading, if you can just look objectively at a chart. So maybe we all know this feeling. If you start out trading, we start with, let's say, if some of you guys start charting yourselves, and then we basically start with basic stuff. And like I always say, start with trend lines, etc. So you draw a trend line here, and you see a breakout. And you think, well, I'm going to short this, and you short it and you win. That's good. It was a good trade because there was some TA involved. So that's how you usually start. You start simple. You start with, normally you would start with small amounts. But what happens is when you start trading without any idea of the emotional side of this game, you will become you will have that feeling of euphoria that it's as simple. Is it really as simple as this? Is it really as simple as drawing a line, looking when it breaks out, or when it breaks down, and then going in a trade and making some money? And basically, yeah, it's that simple, because what we basically do is draw lines and looking at the chart and then entering or exiting. But what happens is when people for the first time lose a trade, then the mindset starts to change, because in the beginning we feel euphoric, and we feel like this can't go wrong, and we feel like, well, it's so easy to make that money. I will up my leverage, and then so let's say the first 5 trades you win, and then you up the leverage and you win another trade, then you up your margin and you win another. And at that point, you may be not realizing it, but at that point you're already gambling, because um, there's a it's just human nature and human psychology that what takes over in your brain is that you want to chase those quick riches. You are expecting those quick gains and you're expecting those riches, and that's what you're chasing. You're chasing quick riches, quick gains. So you have the feeling that you always want to be in a trade, that you always are looking out for the next trade. So this trade played out. I took some profit, and now I'm looking for the next trade. So okay, I'm constantly watching at the charts, and once a trade goes active, I will be continuously watching the chart. So it becomes sort of an obsession, and it's debatable, because from one point of view, that's good. You want it to be an obsession. You want it to have your full attention. You want it to be your total focus when you're trading. But you have to ask yourself the questions: am I still in check with my emotions? Am I still in check with, well, basically who I am? Am I still in control? I think what helped me best, I read a lot of books, and I think a lot of books are about technical analysis and are going way deep in the chart. But the best book I read, and you guys will probably all know that, is Trading in the Zone by Mark Douglas. And that feels like a kind of a Bible to me. I think I read it 3 or 4 times. And it's because that book is really about your mindset. That book is really about how you should make sure that you don't let emotions take control of you. What you need to understand is that you have to stick to your rules. And one quote that always sticks to me from Trading in the Zone is that you have to be rigid with your rules and flexible with your expectations. So you have to be rigid with your rules and flexible with your expectations. But instead, most of us are rigid with our expectations and flexible with our rules. So we change our rules along the way. We change our rules while we're in a trade, or we change our rules because we lost one trade, or you lost 2 trades. So what I started to do, and what I think helped me the most, besides of reading books and knowing what I see on the chart, was journaling every move I made. So I started to journal my trades. I started to journal why I took a trade, or what happened, or what I did and what I should have done, or why I took a trade and why it didn't work. So I journaled it from the technical analysis point of view, but I also took it from an emotional point of view. So how would I feel, or was I chasing losses? Like if I did 3 trades on a day, why did I do 3 trades? Why didn't I just do 1? Well, maybe because I lost a trade, and even though I maybe had the rule I do 1 trade a day, then why did I do that second? Because maybe I lost that first trade. So I think my advice to everyone is to keep a journal. And it can be as easy as on a note in your notes app on your phone, or it can be as big as a whole Excel sheet with everything on it. But just journal yourself, because you have to understand that to be a good trader or a profitable trader, you have to understand yourself. You have to understand that emotions are normal and emotions are human, and it's human psychology, but you have to understand too that once you're trading, that those emotions are just getting you nowhere. You have to look objectively at a chart, and you have to stick, like I said, stick to your rules. So if I have a rule that I only trade once a day, and I took a trade and that trade went the wrong way and it hit stop loss, that's it for today. There's another opportunity tomorrow. You can never outlearn the market. So what I mean by that is that you can, what we tend to do is when, let's say I develop a strategy and that strategy is based on, no, like I said, the Bob D, the breakout breakdown strategy, and that strategy is based on breakdowns and breakouts, and I do that for a while, and then I come to the conclusion that it isn't, the trade doesn't work, or it doesn't work for a couple of times. What people tend to do, and what I did in the beginning too, was, well, then I have to read more. I have to learn more about the market, and I have to learn more about technical analysis, and I have to learn more about how price behaves. But what that book's really good at is saying that you can never, at one point, you can never know everything on a chart. You can never see anything on a chart because there's always something you're not knowing. There's always something you don't know at this point that maybe you have to learn later on. So, but what he also says, you don't have to know everything, because even if you would know everything, which is impossible, the market can still do anything at any time. And so you can have a point of interest or a point that you want to enter a trade because it has a resistance level, it has a Fibonacci level, it has a trend line, it has a fair value gap. I can sum it all up and it still just drops through. I think that's what mostly helped me to keep saying that to myself and repeating that. No matter how confident I am in a trade, there's always a possibility. But that's why I always say that it's that whatever trade I put on, or whatever, if people ask me, is this chart looking good, and is this a trade that's possible? Yeah, it's a possibility, but there's always that other possibility that trades don't work, and that's why you have to look at it without any emotion and just objectively, and be comfortable with losing. Because if you are not comfortable with losing, and you don't understand that losing is part of winning, and in the end it's a part of trading, then you will never become profitable, because it are the losing trades that make us chase losses. It are the losing trades that make us overtrade. It are the losing trades that make us revenge trade. Revenge trade is the point that you are chasing losses and trading because you were in a long trade and market went the other way, so you think, well, then I'll quickly flip the trade around and I go short, and then market goes up again, and then those losses spiral down even more, and you get more and more losses, and there's a point that you can get back to, because what you need is that you then have losses on losses on losses, but you have to go back and stick to your rules. But when you lose too much because you over leveraged, or you put on too much margin and you abandoned your risk management, it'll become harder to make back your losses. Just think about this. If you start, and I'll be talking about percentages now. If you lose 50% on a trade or on your margin, you have to make back 100% to break even. So if you lose 50% on your margin, you have to make 100% back. You will ever have only big wins, small wins, break-even trades, or small losses. Whenever you have a big loss, you're gambling. For some people, $100 is a lot of money, and for some people, they maybe have a lot of money on the side, and they follow our advice and say, well, I'll start small, because we always say, if you start out, start with small amounts. So I think there is people who think, well, I'll start with small amount. But if you do that, make sure that you treat that $100 as if it is your last money. Because if you treat that $100 as your small amount starting out with, and you treat it like, well, I still got 10K on the side because that's what I eventually want to trade with. If you treat that $100 like spare change, or like you don't feel like it's your last money, you are going to lose it. And why is that? Because this is exactly what's going to happen. Because if you don't have the feeling that $100 is valuable and is your, that's why I say treat it as it is your last money you have on earth, that you don't have that other money stacked away, and that you have to build up from that, because that gives you a sense of urge to keep your risk in check. And what happens is, if you start with 100 and you don't have, you don't treat it as such, you will easily do this, because, well, if I lose that 50, doesn't matter. I will then get some more money in until I get to grips with it. And that's why I always say you don't have to, some points, you don't have to look at the value, look at the percentages. You never, ever want to lose 50% of your account in one trade. Never. It goes for anybody. And you have to understand too that in that P&L section, people share trades, and I think there will also be people sharing trades that are definitely not having risk in check. Or you should also be aware of that some people just start with bigger accounts. I wouldn't say or advise to do, because what I say is also you should start small, especially when you're new in trading. But also that what sometimes gives the wrong picture is the percentages on leverage, what people don't always tend to understand. And I think, yeah, you can can hide it or just mute it. But in the end, what there's, if I look back at my own journey, in the end, there's only one person to blame for all my losses, and that's me. That's myself. I have to look myself in the mirror and talk to me and tell myself, well, you fucked up. This is what you did. So you have to go with the consequences, and have to clean your own shit up. So I think that's also, you can hide as much as you want, but in the end, it all comes down to your own mindset. It all comes down to the questions you ask yourself, like, okay, how do things affect me? How does a P&L channel affect me? And why does it affect me? Because that's the question you have to ask yourself. So if that affects me that much, it possibly means I want those big wins too. And what is then the how does that affect my trading? What does it do? So you have to work that out. So why does some things affect you? And and why am I at first? Why am I in this Discord? What is my expectation? What I want to get out of this? Do I want to be rich next week, or do I want to be profitable in the long run, making this a life skill that I can have with me the rest of my life? Or do I want to be rich yesterday sooner than tomorrow? So I think in this group we give you a lot of tools, we give you a lot of information, we do a lot of things like what we are doing here today, and we talk about mindset. But in the end, and that's what I always say, it all comes down to yourself. You have to take responsibility of the way you act when in a trade. If you lose, it's your fault or it's your responsibility. So what you do is then go back to the trade, and what did I do and why did I lose? And of course, even with following signals, maybe the signal wasn't your responsibility because you just followed signals, but why did I lose, and why do I feel frustrated about it? Why do I feel irritated about it? Well, probably if that's the feeling you have after losing money, you're probably having too much margin on it. You lost too much. If you're not comfortable with your loss, then you're having too much money on a trade. If you're not comfortable when your stop loss hits, and you get anxious when trades go in the red, then there's something wrong with your risk management. So even if we say 1%, if you put on 1% and a trade goes in the red, and let's say you have 1,000 or maybe 20, let's say for example you have a 2,500 account for trading, it means 1% is just $25. But let's say one of us, me, Harsha, CB, puts out a trade and says, well, you can put 3% risk on. So 3% risk means $75. If you then have the feeling when trades go in the red, which they usually do, before they go in the green, you have to have that leeway for a trade to play out. So if you feel at minus $25 or at minus $40, you're feeling anxious, or you feel the urge to ask a question about, should we close the trade, or should we will this go back up, or what should we do? If you feel that urge or you panic, then it means you shouldn't be doing 3% because it feels too much. It makes something inside you panic. So then you have to go back and ask yourself, okay, so what should I then change? Should I put less money on a trade, or should I change my mindset? How should I cope with that? And I think what can help is, again, making that journal to see trades that play out and trades that don't play out, and the difference between them. And if you, like we talked about, I think last week, just in the chat, about, let's say, from Monday to Friday, and on Monday you have a trade and you make $50 profit, or even $5 profit, or even less. Make sure that on the next trade you only risk your profits. So don't then just say 1%, but just say, well, I only want to lose, I made $5 this week so far, so I only want to lose $5. So even if I lose this trade, I'll be break even. So yeah, patience is definitely a skill, but it also helps you to make sure to not overtrade. One of the rules you could set for yourself is that if you lose a trade, because losing is sometimes the catalyst for overtrading or revenge trading. So if you lose a trade, trade hits stop loss or get stopped out, or we invalidate the trade, is what you can do is say, okay, in the next 24 hours or the next day until tomorrow, I won't trade anymore. And why is that? Because it helps you to develop patience. It helps you to develop an urge of control, and it makes sure you don't get in that how do you say it, in that mindset of chasing your losses. Well, I lost a trade, that's okay because it's part of trading, and then you have to get back to it tomorrow. It comes down to discipline, and you can't. Some people have discipline just from as a natural human being with a lot of discipline. Some people don't have discipline, and I think having things to do or to know what to do when you're not at a chart or it definitely helps. What definitely doesn't help is being constantly looking at the charts when in a trades. What I want to teach you guys too, that every trade you take or everything you do teaches you something about your emotional mindset, about how you trade or how you cope with things. It's okay to feel emotions, but it doesn't need, or you shouldn't let it rule your should make your decisions. You shouldn't make your decision based off emotions. So that's why those rules help. And even if you have those rules, you should make how do you say it? You should keep them. The rules are first. So if the rule said invalidating, this trade is invalidated, so I cut it, you cut it.